is Panacham here. Welcome to my YouTube. Today I'm gonna do an educational video, to spread the goodwill. I believe in good karma, you know, and I like to educate people. Yo guys, so I've recently got into Patreon. So if you guys like my video content and you want to donate to me, just go to the Patreon and maybe you could donate a few dollars to me, for my effort. Okay, now I'm gonna do a quick review, quick introduction to Elliot Wave. A lot of people have commented about Elliot Wave being pretty useless to the market. Yeah, probably. They're probably right because they're using it the wrong way. Yeah, so if you master this, you don't have to master this at all. Actually, you just need to know the basic. Okay, you could trade the market using your style, but probably maybe change things up with a little bit basic knowledge of Elliot Wave. Okay, so now I'm gonna show you guys this impulse wave. I'm gonna introduction into impulse wave here. Now the impulse wave, impulse. It only turns impulsive if it measures 1.618. Okay, if it does not measure 1.618 in the Fibonacci, then it is not an impulse wave. All right, you guys, it has to be impulsive. Okay, it has to be like let's say measure here to here and then to here. You see how it already broke out the 1.618, right? This is an impulse wave. All right, so when you see something like this, you only ask yourself one thing: is it a start of something or is it an end of something? Now, why do I say that? Impulse waves are made out of 5 waves: 5, 3, 5, 3, 5. Okay, structures: 5, 3, 5, 3, 5, 5 waves. All right, now just look at this pattern here. So every 5 waves, the first wave are made out of 5 waves. 5 impulse wave. Okay, look at this. All right, and the third wave is made out of 5 wave as well, and the fifth wave as well. Okay, a wave, and then we have we have the second wave and the fourth wave, which is 3 wave that is made out of corrective waves. Corrective waves are much more difficult. Okay, so I'm gonna just go to the basic 5 waves. All right, so the basic rule of the 5 wave. So I'm gonna include this PDF file in my channel. So you guys, you want to take a look, review back, just open the PDF file. All right, now the 5 wave rules. There's 3 rules. I want to make sure you guys know that. Okay, the wave 2 cannot retrace more than the beginning of wave 1. So now you see every time I put out a signal, right, I always say, oh, long here. No, I put a pink box and then I say long here. The stop loss would be this bottom here. That's it. Okay, then you wait for the this up move. Okay, so that's the wave 2 rules. So wave 3 cannot be the shortest. Now if let's say, okay, for example, like this one, right, you said that this is a wave 3, right? Okay, so within, like, if for example, like if this is a wave 1, 2, okay, like 3, 4, 5, right? But then you get extended like that. So what does it mean? Okay, so there's many options. Okay, so either that the whole thing here, whole thing here is inner here has a 5 wave up as well, but you could not label it like that because third wave cannot be the shortest. So the only way that it only makes sense if the whole thing here is another 5 wave, and then this is the fourth wave, the 5 wave. So you know that you're expecting another up move. Okay, you see how this already break it. Okay, now the wave 4 cannot overlap the end of wave 1. Okay, which is this. Okay, let's say that this here came down here, right? So it's invalid, no longer valid. This is not an impulse, it is something else. All right, definitely is something else. Now I'm gonna give you an example. Okay, and I'm gonna go to the 1 minute here on the Bitcoin. Take a look here. All right, I said in my Telegram group, I said that if I want to see a reversal here, okay, I want to see a 5 wave down like that. Okay, if I want to see a reversal, right? But if the fourth wave came back up right here, so it's kind of invalid already, because you already, took the it's already invalid because it's already broken this high right here. I mean, it broken this high here. Most likely, it's not an impulse wave. That's how I know that I hold my long. I'm still holding my long because I know that it's still gonna go upside. Okay, but how does it go upside? It depends on the market as well. I mean, it's quite a complicated to explain a correction. It can do something like this as well. In between, this is a flat like that, and then the market is still gonna come down. So it's quite difficult for me to explain on a corrective pattern. But for now, today I'm gonna talk about impulse wave only. Okay, so basically the fourth wave cannot retrace back to the first wave. Okay, that is all the simple. Okay, now I'm gonna give you guys a bit of extra of tips, because this kind of trading style only works in Bitcoin. All right, doesn't work with other platform. I'm not sure, but Bitcoin is one of my major. So I'm gonna show you guys how I look at the market now. The triangles only exist in the fourth wave. So when you see a triangle, you know that the market is almost ending. Okay, it could be the third wave of the fourth wave. Okay, which is the third wave. This is the third wave. Let's say that this is the third wave of the fourth wave, the third wave of the fourth wave, which is here. So we're gonna make another high, and then we're gonna make a correction. So basically, I want to see a two triangles, or maybe a two correction overlapping like this, confusion. Okay, just like over here. Okay, there's a lot of confusion. There's a triangle here, maybe like a WXY here, and then a triangle here. It's confusion, right? So, but whenever I see a triangle, that is where I prepare to take profit. Okay, because the market tells me that it's ending. All right, so remember this pattern. Okay, now pretty easy to explain. So basically, you get a 5 wave up, you wait for 2 wave pullback. Okay, 2 wave pullback, which is something like an ABC. All right, so usually the impulse wave, okay, you just take the fib retracement, you take the low to the high. Okay, usually, okay, the second wave lands on 618. Okay, lands on 786 or 618. But if it remain at the 618, okay, usually the market lands on 618 for the second wave for Bitcoin. So if it goes lower, okay, usually it is telling me that it's not a second wave. Okay, for example, like this one here. All right, we take the last low, we measure it up. Okay, technically it still hit the 618. Okay, but it went a little bit slightly lower. Okay, but it's fine. It's like a stop hunt. So you don't put your stop loss like when you make a trade, you enter it here. Okay, you don't put your stop loss right here. You put your stop loss right bottom here. Okay, same as this one. You put a stop loss right bottom here. Okay, because the rule is the wave two. All right, the wave two. Let me change that color. The wave two will never go below that. Okay, so what happened? You just wait for the market to impulse, right? And then by that you're gonna move your stop loss to this part. You want it to take this high. You want the market to take this high. Then if you entered here, right, then you move your stop loss to break even. Okay, you want it to break this high first before moving your stop loss. If you, let's say if you move your stop loss right here, right, when the market pump, you move your stop loss like break even, you might have the risk that it's coming back down to a double bottom. It always happens in Bitcoin. Okay, so you guys want to be careful on that. Okay, so I think that's about it. Quick introduction. So this is a corrective pattern. So I am expecting the market is gonna do some kind of a wave like this. Okay, I am expecting the market to something like that. It's an ABC. Okay, it's a corrective pattern, but I'm gonna explain correction in the next video, but today I'm gonna just explain impulse wave. Okay, it is made out of 5 wave. So we are now doing here. So the 4th wave is quite difficult because, I mean, it could be finished, like for example, it could be finished like that, right? And we still have another leg up, just like that over here, around 11,600 something only. It's not gonna go. It's not gonna go higher. But if the market, continue, if it goes up and then continue making another side wave, of course, I'm gonna expect another up move. So within that, we want to spot a reversal just like this. Okay, so if the market's gonna do a 5 wave down, right, it's gonna pull back. Okay, remember the market always gonna pull back. That is Elliot wave. So if it does not pull back, like a one straight candle like that, you'll know that it's a 3rd wave. Okay, it's a 3rd wave. 3rd wave always cannot be the shortest, but it always usually is longest. Okay, guys. So remember, this is just an introduction, to the market. So whenever you see structure like this, when you see a green candle like this, you'll know that this is an impulse. So what you do, you wait for a 3-wave pullback to the 618 to the 786, take a trade, put your stop loss here, and that's it. That's what you're gonna do, and leave the market out, for a moment there, and come back to the market, maybe like 1 week or 2 week. All right. Elliott wave is always strong benefit in trading swings. All right. So like for example, if you took a long here, right, maybe a long somewhere around here, right, the market came back up and then came back down. All right, you hold your stop loss here. You don't move it first. Okay, and then you wait for the impulse up. The between time here and time here almost took a month or maybe 3 weeks. So Elliott wave is always a swing, right? A lot of people scalping, they wait for like a 5 wave up, and then they take profit, and then they wait for a 3 wave pullback, and then they keep scalping each waves. I think it's profitable, but in exchange they're charging all those fees. Sometimes it's end up paying fees only. So the reason why I learned Elliott wave, because I want to find out the swings. I don't, I try to not to go in and out the market so often, because I'm gonna pay fees by the end of the day. So I don't want to do that. Okay, so now I'm gonna go back to this correction. Next time I'm gonna make a video out of it. Correction a little bit different and a little bit harder to explain, But impulse wave is really easy. I mean, it's just five wave, five waves, and the rules are this. Okay, guidelines. All right. I have and the Fibonacci has to be have relation to it. So it's just not only looking at the five wave, the Fibonacci have to measure right as well. Okay, guys. So I think that's about it today, and I'll see you guys in another education video on corrective pattern. All right. See you guys later. Bye.